Hi, my name is Bob Brooks. Here at the Prudent Money Channel, one of the things that we want to do is provide you resources and make this a little bit more interactive. I want to tell you about a resource that if you go to www.prudentmoney.com, there is a section called the Ask Bob section. You go there, you can send in a question. I do answer all of these emails. It doesn't go into some black hole. You actually do get it answered. I've been doing this for Prudent Money listeners on my radio show since 2002 and offering it as a resource. In fact, at one point, we'd figured that I'd answered over 15,000 emails. I take it very seriously, and you can use that as a resource for you. Once again, it's at www.prudentmoney.com. We had an email come in. I wanted to talk about it, and in fact, we may actually be talking about some of your emails if you send them in. Dear Bob, my employer is pushing new hires into the company's sponsored 401k plan. I'm not so sure I want to participate. What are the pros and cons of the 401k plan? Signed, Bill P. That was at prudentmoney.com. It's really interesting, and I think that that's an important question, one that's not really asked, because think about the 401k plan. You're expected to invest into it. It's conventional wisdom. I don't know about you, but I tend to challenge conventional wisdom to make sure it's conventional for me. And so, but it is conventional wisdom. It's convenient. It just comes right out of your paycheck. It supports the pop culture financial belief of just save. It drives me crazy about this is that the financial media wants you to believe that all you have to do is save 15% a year and you're going to retire just fine. And as you know, of a listener and watcher of these videos, that it takes way more than just saving money. The emphasis is on so many more things. But then there's the free money concept, where you get an employer match, and which is really the best attribute of a 401k plan. But I have to tell you, though, is that the 401k plan is not the best alternative in all cases. I know that kind of bucks the system a little bit, but here's the thing. If you're picking one account to accumulate the majority of your wealth, wouldn't you want to be picking the right account, giving you the most benefit, not just doing it because someone said to do it? Why you might want to think twice about a 401k plan. First of all, investment choice is limited. I've looked at many 401k plans throughout my career, and what I find are plans that have very limited choice of stock funds and bond funds, and really that's all they've got is stock funds and bond funds. You're not going to find any alternative investments in a 401k in most cases. And then I've talked about on other videos about the risk level of the fund, where it makes sense to be in what's called lower beta funds, lower risk funds. You don't really see that much difference. Everything's just pretty much market oriented, so you don't have much choice. That's one of the biggest hangups that I have with 401k plans. No employer match. If they're not willing to give you free money, I wouldn't even participate in it. That's just me. I'm not telling you not to, but because that is the key benefit of a 401k plan is that free match. If they're going to give you dollar for dollar up to 5% of your contribution, then I would take that. That's automatic return on your money. In fact, kind of how I balance that out is I always say, take the employer match up to the point that they stop giving it, and then look elsewhere, and we'll talk about where you go to invest your money. And then there's a limited flexibility. The 401k plan is for a buy and hold investor. Now, what we talk about with buy and hold investing is that works, but not all the time. There's times when the market gets in trouble, when you need a plan B. So it makes sense to have a plan A and a plan B. It's tough to do that in a 401k plan. And then there's cost. Now, this isn't as big of a deal as it used to be. These 401k plans were very expensive. All the expenses were built into the plan, and so you never really knew what you were spending. Now, today, you're seeing lower costs, but that it is still somewhat of a problem in some plans that are outdated. But here's the benefits from outside investing. Now, I'm asking you to think out of the box. I'm asking you to consider, first of all, is your 401k really worth it? And number two, what other alternatives are there? First of all, choice. You have unlimited choice in an outside investment account away from a 401k plan. You've got all kinds of different types of mutual funds, stocks, exchange traded funds, you name it. It's there for you to invest into, so you can really customize towards your risk level and your goals. Second is strategy. You have all types of strategies available to you as well that you don't have in a 401k plan. You have professional help. You can have an advisor actively manage from a plan A, plan B standpoint. And then cost. You get to sign off on the amount of cost that your investments are being charged against you. So you can see, if you're going to be accumulating money, wouldn't you want to have all these benefits in your overall investment strategy? Now, what are those other options? What are those outside accounts? Well, you have the IRA and the Roth IRA. Now, I'm a big fan of the Roth IRA, more so than I am the IRA. Both of these are considered alternative retirement accounts, and really those are the kind of the go-to accounts if you don't have access to a 401k plan. But with a Roth IRA, you get a much bigger tax advantage than you do with an IRA. Let's start with an IRA. You put that money in on an annual basis. That money that you invest into the IRA is tax deductible. You don't pay taxes on that money. And then the money grows without you paying taxes. And then at the very end, when you take money out of the IRA, that's when you pay taxes on the full amount. Versus the Roth IRA, you don't get that tax break up front because you're using after-tax dollars, but that money grows over time, and then when you take that money out, guess what? It comes out tax-free. So let me give you a scenario. You have $500,000 in an IRA, $500,000 in a Roth. You take out $100,000. Out of the Roth, it comes out tax-free. You get the full $100,000. Out of an IRA, you might get $75,000, $70,000 because you got to pay taxes. Which one seems a little bit more appealing? Probably the Roth IRA, I would think. And you're missing out on a little bit of a tax deduction along the way. That is nothing compared to the tax benefit of accumulation in a Roth IRA. So that's the kind of the first place I would go, is investing in at least one of those accounts. But there's a limit to the amount of money that you can put into it. Then I would go to a taxable investment account. And what I see is people kind of shy away from this because they see the word taxable, meaning I'm going to have to pay taxes along the way. I always say that taxes shouldn't be a big factor in you deciding on what to do. The benefits from these outside investments are really what you should be focusing on. So is investing in a 401k plan always a good idea? It's not always. It's important to make sure that the main account that you're accumulating your wealth in over time is the right account for you.